will proceed accordingly. The Monetary Policy Committee reviewed the macroeconomic developments and the outlook over the course of the past 2 days, that is 2nd and 3rd April, and in its meeting today, it voted by a 4:2 majority to reduce the policy repo rate by 25 basis points and to maintain a neutral stance of monetary policy by a 5:1 majority. I thank the MPC members for bringing to the discussions their experience and erudition. I also wish to express my appreciation for our teams in the Reserve Bank for their hard work in providing high quality inputs for NPC's deliberations. I would now like to set out the main global and domestic developments that the MPC evaluated while formulating this decision. It noted that there is a further loss of pace in global economic activity since its last meeting in February 2019. Moreover, the slowdown appears to be synchronized across advanced economies and some major market economies as well. This assessment is also reflected in the monetary policy stances of their central banks, which have either eased or paused. Inflation remains low in major advanced and emerging economies, although crude oil prices have risen on production cuts by major producers and supply disruptions among some exporters. As regards financial markets, equity markets have generally rallied. Bond yields have eased in some advanced economies and they have slipped to negative territory. In currency markets, the US dollar has traded with an appreciating bias while emerging market currencies have softened. Turning to domestic developments, the MPC observed that the Central Statistics Office CSO has pegged India's real gross domestic product GDP growth at 7% for 2018-19, down from 7.2% in its first advance estimates. More recent high-frequency indicators point to manufacturing growth slowing down while investment demand is subdued. Credit flows into micro and small as well as medium industries remains muted, though they somewhat improved for large industries. Capacity utilization in the manufacturing sector is running above its long-term average. There is also some improvement in business sentiment. High-frequency indicators of services sector such as sales of commercial vehicles and freight traffic indicate moderation in activity. The MPC also noted that CPI inflation rose to 2.6% in February 2019 after 4 months of continuous decline. The upturn reflected an increase in prices of items excluding food and fuel and weaker momentum of deflation in the food group. Households' inflation expectations declined by 40 basis points each for the 3 months ahead and for 1 year ahead horizons. Manufacturing firms reported reduction in input price pressures. On India's external front, export growth remained weak in January and February 2019, while imports, especially non-oil gold imports, declined. The trade deficit narrowed in February 2019 to its lowest level in 17 months. Net FDI inflow were, however, strong, while foreign portfolio investors turned net buyers in domestic capital market in Q4 of 2018-19. India's foreign exchange reserves were at 412.9 billion on 31st March 2019. Taking into account these developments and looking ahead, the MPC revised the path of CPI inflation downwards to 2.4% in Q4 of 18-19, 2.9 to 3% in H1 of 19-20, and 3.5 to 3.8% in H2 of 1920, with risks evenly balanced. GDP growth for 1920 is projected at 7.2%. 6.8 to 7.1% in H1 of 1920 and 7.3 to 7.4% in H2, with risks evenly balanced. Beyond the near term, the MPC assessed that the short-term outlook for food and fuel inflation remains benign, although there is some uncertainty around the prospects for the monsoon and seasonal reversals in the prices of some items. The outlook for oil prices continues to be hazy both on the upside and the downside. Inflation excluding food and fuel has remained elevated but has shown some moderation compared to first half of 2018-19. Financial markets remain volatile. The fiscal situation at the general government level requires careful monitoring. Overall, the output gap remains negative and therefore strengthening domestic growth impulses by spurring private investment assumes priority. To summarize, global growth is slowing down, and this is also reflected in 3 successive downward revisions made by the IMF in its projection of global growth for 2019. Domestic GDP growth is also estimated to slow in 2018-19, with high-frequency indicators suggesting slackening of urban and rural demand as well as investment activity. While bank credit is growing at 14.3%, it is not broad-based. Bank credit to micro and small industries, which are critical to employment and exports, was flat at 0.6%, and also credit to medium industries at 0.7%. Growth projections for 1920 have accordingly been revised downwards from 7.4%, which we had projected earlier, to 7.2%. Retail inflation rose to 2.6% in February 19 from a low of 2% in January. However, the upturn has turned out to be 30 to 40 basis points lower than our projections made in the February policy. Accordingly, inflation projections have been recalibrated. As per our current projections, headline CPI inflation is projected at 3.8% in Q4 18-19. Against this backdrop, the MPC voted to reduce the policy rate by 25 basis points while maintaining a neutral stance. Going forward, the Reserve Bank will continue to watch the evolving macroeconomic situation and shall act in time and act decisively. With the inflation outlook remaining benign, the RBI will address the challenges to sustain growth of Indian economy while ensuring price stability on an enduring basis in pursuance of its mandate in the Reserve Bank of India Act. I would now like to address some developmental and regulatory policies which we have announced today. We have about 11 announcements. One, the liquidity coverage ratio, LCR. The first one relates to LCR, liquidity risk monitoring tools, and LCR disclosure standards. We have allowed an additional 2% of SLR to be reckoned as level 1 high quality liquid assets for the purpose of computing the LCR of banks. While this move will harmonize the liquidity requirements of banks with LCR, it will also immediately release additional liquidity for lending by the banks. It has also been decided to form a committee on development of housing finance securitization market. We are aware that well-functioning securitization markets can enable better management of credit and liquidity risks in the balance sheets of banks as well as non-bank mortgage originators, and in turn would help lower costs of mortgage finance in the economy. We have therefore decided to constitute a committee that will assess the state of housing finance securitization markets in India, study the best international practices as well as lessons learned from the global financial crisis, and propose measures to further develop these markets in India. 3. It has also been decided to set up a task force on development of secondary market for corporate loans. At present, the secondary market for corporate loans in India is dominated by transactions of banks in non-performing assets and is constrained by sparse information on pricing and recovery rates. Recognizing the benefits of an active secondary market in loans, the Reserve Bank will set up a task force to study the relevant aspects, including best international practices, and to propose measures for developing a thriving secondary market for corporate loans in India. The next point, that is item 4, relates to the issue of instructions on an external benchmark. As announced in the Statement on Development and Regulatory Policies of December 5, 2018, it was proposed that all new floating rate personal retail loans, housing, auto, etc., and floating rate loans to MSMEs extended by banks from 1st April 2019 shall be benchmarked to external benchmarks like the RBI repo rate or any other benchmark market interest rate published by the Financial Benchmark India Private Limited. Taking into account the feedback received during discussions held with the stakeholders and issues such as 1. Management of interest risk by banks from fixed interest rate linked liabilities against floating interest rate linked assets and related difficulties, and 2. The lead time required for IT system upgradation. It has been decided to hold further consultations with stakeholders and work out an effective mechanism for transmission of rates. In the meantime, we have taken several measures to enable better management of interest rate risk by banks. For instance, by allowing non-residents to participate in the rupee interest rate swap market. Number 5 relates to counter-cyclical capital buffer. The framework on counter-cyclical capital buffer CCCB was put in place by Reserve Bank in terms of guidelines issued on February 5th, 2015, wherein it was advised that CCCB would be activated as and when the circumstances warranted, and that the decision would normally be pre-announced. Based on the review on and empirical testing of CCCB indicators, it has been decided that it is not necessary to activate CCCB at this point of time. Item number 6 relates to permitting government security trading through International Central Securities Depositories, ICSDs, as a step in the continuing process of broadening the investor base for government securities. The Reserve Bank, in consultation with government and SEBI, shall open a separate channel for international investors by allowing them to invest through International Central Securities Depositories, ICSDs. 7 relates to licensing of non-banking finance companies, NBFCs, as authorized dealer category 2. Increasingly, a large segment of resident Indians are availing foreign exchange facilities for the purpose of overseas education, medical treatment abroad, business travel, and private visits, which are primarily non-trade current account transactions. And these are presently undertaken only through authorized dealers category 1, 2, 3 and full-fledged money changers, with a view to improve the ease of undertaking forex transactions by increasing the last mile touch points of regulated entities to sell foreign exchange for non-trade current account transactions. It has been decided that non-deposit taking systemically important non-banking finance companies, that is NBFCs, NDSI, in the category of investment and credit companies, will be made eligible to apply for grant of authorized dealer category 2 license. Detailed instructions in this regard shall be issued by end of April 2019. 8. Benchmarking India's payment systems. Benchmarking India's payment systems is necessary to gauge India's progress vis-a-vis payment systems and instruments in major countries and give further impetus to the planned efforts for deepening the digitization of payments. A report containing the findings of such an exercise will be placed on the RBI website by the end of May 2019. 9. Framework for harmonizing turnaround time for resolution of customer complaints and compensation. Currently, different payment systems have varied mechanisms for addressing customer grievances, and the time for resolving customer complaints are not uniform. In order to have a prompt and efficient complaint redress framework for all electronic payment systems, it is necessary to have harmonization of the response time for complaint management and for other payment transactions, such as reversal of failed transaction across various payment systems. To this end, the RBI proposes to come out with a framework on turnaround time for resolution of customer complaints and compensation framework across all authorized payment systems. 10. Convergence of priority sector lending guidelines for housing loans between scheduled commercial banks, regional rural banks, and small finance banks. The housing loan limits for eligibility under priority sector lending were revised during June 2018 for scheduled commercial banks, excluding regional rural banks and small finance banks. It has been decided to extend the revised limits to regional rural banks and small finance banks also to provide level playing field to these banks. 9. Extension of NBFC Ombudsman scheme to cover non-deposit taking non-banking finance companies. In pursuit of strengthening the grievance redressal mechanism for bank customers, the Reserve Bank will widen the existing NBFC Ombudsman scheme introduced in February 2018 to cover customers of non-deposit taking NBFCs registered with the RBI and having asset size of rupees 100 crore and above. There is one more point which I would like to add with reference to the Honorable Supreme Court order on the February 12 circular. As you are aware, Honorable Supreme Court has held the RBI circular dated February 12, 2018 on resolution of stressed assets as ultra vires. The court has held that RBI's directions under Section 35AA of the Banking Resolution Act 1949, which are in respect of debtors generally, would be ultra vires of that section. Thus, the order of the Supreme Court mandates RBI to exercise its powers under Section 35AA in respect of specific defaults by specific debtors. The powers of RBI, it must be added that the powers of RBI under Section 35AA and other sections of the Banking Regulation Act 1949 and are not in doubt at all. So they are not under doubt. The court, what basically the Honorable Supreme Court has said, that the powers of RBI under Section 35AA have to be exercised in a particular manner, and the validity of the Section 35AA stands, and henceforth we have to comply with the directions of the Supreme Court in this regard and act accordingly. In the light of Honorable Supreme Court order, the Reserve Bank of India will take necessary steps, including issuance of a revised circular as may be necessary for expeditious and effective resolution of stressed assets. The RBI stands committed to maintain and enhance the momentum of resolution of stressed assets and adherence to credit discipline. Thank you.
Do the previous restructuring tools like SDR, CDR, S4A, do they stand, until you come out with a revised stressed asset resolution?
I would not like to spell out further details, as I have said that we are considering the issuance of a stressed as a revised circular as may be necessary. So at this point of time, I would not like to elaborate anything further on this other than what I have said, and my statement in this regard also will be uploaded in our website so that it is easy for you to sort of report about it.
Just a follow up.
नए सर्कुलर के लिए कोई टाइमलाइन आप देंगे कब तक नया सर्कुलर आएगा? और इस बीच बैंक्स आपसे बात कर रहे होंगे कि जो केसेस अभी चल रहे हैं अलग अलग स्टेज पर, उनको वो किस तरह हैंडल
देखिए, जैसे मैंने पहले कहा, इस मामले जो सुप्रीम कोर्ट ने ऑर्डर दी है, इसके बारे में कोई इस स्टेज में मैं कोई फर्दर एलाबोरेशन करना नहीं चाहूँगा, लेकिन सर्कुलर जो है वो जल्द ले आएंगे। ऐसे मतलब उसको देयर विल नॉट बी एनी अनड्यू डिले इन दैट। और इस क्वेश्चन के बारे में मैं बस सिर्फ यही कहना चाहता हूँ कि इसमें कोई फर्दर एलाबोरेशन इस पॉइंट ऑफ टाइम पे, एट दिस पॉइंट ऑफ टाइम, मैं करना नहीं चाहता हूँ।
So just related, sir, on growth.
बाहर आ जाएंगे सर पॉलिसी पे
एक no, I think it has to be in an orderly manner. I will give chance to everybody to ask question, whoever wants to ask. So no need to hurry. आपने पूछ लिया, one question per person, please.
इजाजत दें आप।
अच्छा, I am allowing you, but one person, one question please, so that सबको चांस मिले।
पॉलिसी पे मेरा सवाल ये था कि आपकी जो मॉनेटरी पॉलिसी रिपोर्ट है उसमें ये लिखा है कि आप एज्यूम कर रहे हैं नॉर्मल मानसून होगा। अब जो स्काईमेट का फोरकास्ट आया है कि शायद 93% बारिश होगी, एल नीनो हो सकता है, ये बात आपके स्टेटमेंट में भी थी। अगर ऐसा होता है तो आपके आज के प्रोजेक्शंस जो हैं ग्रोथ और इन्फ्लेशन के, उस पर कितना असर होगा, इस बात को ध्यान में रखते हुए कि आपके स्टेटमेंट में और रिपोर्ट में ये भी कहा गया है कि फूड ग्रेन काफ़ी सरप्लस है और तमाम चिंताओं के बाद भी फूड इन्फ्लेशन अभी भी आप नीचे देख रहे हैं, तो आपका आज का फोरकास्ट कितना बदलेगा अगर स्काईमेट के फोरकास्ट के मुताबिक बारिश कम होती है तो?
देखिए, वेदर फोरकास्ट के बारे में तरह तरह की फोरकास्ट आए हैं। हमने ये भी देखा है कि ऑस्ट्रेलियन अथॉरिटीज़, जो मेट्रोलॉजिकल अथॉरिटी है, उनका जो फोरकास्ट है उसके हिसाब से शायद नॉर्मल या अच्छा मानसून रहेगा। और एक तरफ स्काईमेट का रिपोर्ट आप जो कह रहे हैं कल आया है, तो इसीलिए हमारा जो एमपीसी का जो डेलिबरेशन है, इसमें सारे रिस्क फैक्टर्स आर टेकन इनटू अकाउंट। ऑल रिस्क फैक्टर्स, ऑल अपसाइड्स एंड डाउनसाइड्स, सारे ऑल दिस फैक्टर्स हैव बीन टेकन इनटू अकाउंट। और उसके बाद जो एमपीसी का डिसीजन लिया गया है टू कट इंटरेस्ट रेट्स बाय रेपो रेट्स बाय 25 बेसिस पॉइंट्स, एंड जो मॉनेटरी पॉलिसी स्टैंड है उसको न्यूट्रल में मेंटेन किया जा रहा है। यस प्लीज।
Thank you, Governor. Governor, as the only senior citizen, I'm very sure this side of the table, you must permit me 2 questions. One of which will be very brief, or one of which will be slightly longer.
No, I'm also a senior citizen.
I know, perhaps you and I are the only ones. Anyway, so my first question really is that did the MPC really consider the possibility of a hung parliament or any kind of political uncertainty while taking its decision? And please don't tell me the MPC considered all possibilities, but please, I want specifically about the political uncertainties which are there at the time, before any election. My second question is just this, that in the past few months we've seen a series of instances where the RBI has been taken to the court, whether it is the Kotak Mahindra case or now the shipping companies and the power companies, and NCLT saying that you must take prior permission to the banks before you declare an NPA. So do you see this as a welcome sign of democratization of the RBI's power? Or are you concerned that the RBI, which was once considered like the Bundesbank, like there's that famous saying that Germans may not believe in God, but they all believe in the Bundesbank, do you consider that this somehow, in some way, takes away from the aura of invincibility of the RBI, and that might perhaps impact the RBI's actions? And does that worry you?
Your first question is a trap. I will not answer that. I would like to say that the MPC has considered all upsides and downsides in the current to the current macroeconomic situation. With regard to the litigation, it's always the democratic right of any person, individual or legal person, corporate entity to challenge the decision of any authority in the court of law. The Reserve Bank cannot be an exception to this. And as I had mentioned in my first press briefing which I had given, we are now undertaking, it was going on, I am not saying that for the first time we are doing it, it was happening, but as I have reiterated in my first press conference, that we are now undertaking wider stakeholder consultations, and decisions are taken on that basis. And you would have seen over the years, before a decision is taken, the draft discussion paper or the draft circular is always placed in the RBI website and decisions are taken. But then it has to be appreciated that there are certain regulatory aspects where, considering the criticality of these regulatory aspects, it is not possible for the central bank to place it in the public domain and get comments. These are cases where the Reserve Bank has to act based on its own wisdom and based on internal consultations with stakeholders and experts. I think I'll come this side now. Yeah, please.
I should stake claim as the second senior most reporter, sir.
I'll just come.
Since
Yeah.
seniority is
I'll just come.
So good afternoon, this is Govardhan from the Economic Times. You have cut both the inflation and growth forecast at the same time, and you have an inflation forecast at 3.8% for the second half of next year. That leaves at least 200 to 220 basis points positive real rates. So whichever way you go, whether it is repo or a treasury bill or the 10-year benchmark. Does the MPC risk of falling behind the curve in terms of the need to strengthen the domestic growth impulse just by giving 25 basis points when you have such a huge room to do more?
You see, on the real interest rate and whether there is additional space, I mean, I'm not going into that. But we are also conscious of the fact that there has to be appropriate and effective transmission of rates. After the last meeting, I had held a meeting with the banks, both public and private sector. The banks have marginally, up to about 10 basis points, they have cut their MCLR, but more needs to be done. And it's a question of deciding on the quantum of rate cut based on your assumption of what is the right call at that particular point of time. Whether there is space, I am not going into that, but assuming that there is space, there are upsides and downsides. All these things have to be taken into account, and based on that, a considered call has to be taken. And so therefore, it is the RBI's, MPC's considered call that at this point of time, a 25 basis points. So you have to see these 25 basis points over and above the 25 basis point cut which we had done. So we have done in the two successive MPCs, we have cut by totally 50 basis points. And during this entire period also, you